All right, welcome back everybody to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin. China is aiming to replace cash with a two-tiered digital currency. Let me rephrase. China is aiming to replace cash with their two-tiered digital currency. This is information that I reported to you about a week ago. Well, we have new information coming out of Binance. A report coming out of Binance, who does have close ties with the Chinese government, and they've given us an overview of the expected characteristics of China's CBDC. Charts on their operating structure, charts on their two-tiered system. Today I want to break it down for you, expectation-wise, what this means for you, not only as a Bitcoin investor, but just as a human. I think we all consider ourselves human here, because this is it. This is the new world order. If China doesn't do it, other governments will do it. China's aiming to get there first. Of course, in simplistic terms, we can compare this to Facebook's Libra coin, maybe Telegram's coin. We need more information on that, but let's dig in. A fresh research report from a major cryptocurrency exchange, Binance, speculates over details on China's upcoming digital currency. Specifically, Binance suggests that the digital currency will most likely have a two-tiered system. As such, this system could replace the fiat paper notes and coins currently in circulation. What you need to know is, yes, this will be essentially the same thing as the fiat we have now, one-to-one fiat backing, only this time, China's going to know exactly how you spend your money, exactly your buying habits. This is Big Brother with a vengeance, what China's trying to pull off. But this report, which I'll show you in a second, this report was released yesterday. Furthermore, and this is the report by Binance, furthermore, it delivers some interesting insight on the People's Bank of China central bank digital currency. First and foremost, the report suggests that the CBDC, Chinese bank central bank digital currency, will receive backing by the fiat currency of China, the renminbi. So that's the one-to-one fiat backing that they're talking about. This is information that we've reported over the last week about China's new stablecoin. But in addition to this, however, the digital currency will supposedly have a two-tiered structure. This essentially means that the digital currency will have an intrinsic structure to support a myriad of actors. These include commercial banks, businesses, and individuals, as well as the People's Bank of China itself. Now this, at first glance, might sound confusing in terms of why do we need a two-tiered structure. In layman's terms, and I will show you this in a second, with those charts that Binance so lovingly provided, but this essentially keeps the power with the commercial banks and with the big players. By the way, if you disagree with any of this, let me know down below in the comments. We can all learn from each other down there. If you're in China and you have more information, let us know. But simply put, this system will use a first layer which connects two sole parties. It's going to connect the People's Bank of China with commercial banks. So already, just two players get to control that first layer. This will allow for the issuance of currency as well as the redemption of it. Sounds like practically everything. Consequently, this layer will only see interaction from the People's Bank of China and the commercial banking actors. And let me show you. And I'm going to link this whole overview down below in the comments. This just came out. I encourage you to read the whole thing. I read most of it. I skimmed some of it. But let me show you what I found most enlightening. This is a chart of what the expected two-tiered system is. And you can see the money starts at the People's Bank of China. It gets issued to the commercial banks. This is that first layer. Only after the commercial banks get control, then individuals can withdraw it. Businesses and individuals can then deposit it back with those commercial banks, and then everything can get redeemed with the good old People's Bank of China. Essentially, same bullshit, different candy wrapper, or however you want to say it. Now Binance, they spin things a little differently. And again, there's not really a spin here because this is informational, if anything, but according to Binance, this is good for the individual because with this system, how do they put it? This system could allow for fund transfers without needing a bank account. So it essentially makes you the bank. The downside, in my opinion, is, what's really changed? It all gets tracked and all goes back to Big Brother. But the report goes on. The report says that the aim of this digital currency project is to create a CBDC equal to cash. So the goal is to make this just like cash. How else can I say it? The end goal for the CBDC is to display a turnover rate as high as cash while achieving manageable anonymity. That's interesting. Who's anonymous in this situation? Well, in other words, in the first layer network of the CBDC, which again is just between the People's Bank of China and commercial banks, just these two players over there. So in this first network layer, real name institutions are expected to be registered. So these guys are expected to be registered, while the transfer in the second layer between you, me, businesses, the transfer in the second layer network would be anonymous. But here's the kicker, would be anonymous from the perspective of the user. It's definitely not going to be anonymous to the government that wants ultra control. But hey, anonymous for the user. Neat. Am I wrong here? If I'm wrong here, please educate me down below in the comments. I would love if I was incorrect in some sentiment or another. But just to finish this off, and guys, I have 3 other big news stories I want to clue you in with. But just to finish this off, the system would reportedly be able to handle up to 300,000 transactions per second, which is a staggering amount. But moreover, Binance also reports that smart contract architecture has been on the table. So maybe not just a currency. Maybe it will be a smart contract platform like Ethereum. Anyways, New World Order. As I get more information, I will keep you updated, so hit subscribe to stay up to date on the most current news in the cryptocurrency space. But let's keep going. CME Bitcoin futures just broke a record. They broke a trading record. They are now averaging over $370 million per day. And full disclosure, the statistics on this are coming out from a month prior, maybe even 2 months. This article just came out. These statistics are from, I think, about 6 weeks ago. But this proves, from an institutional level, this is still an exciting time for Bitcoin. Now, full perspective, unfortunately, anything right now involved with the CME Bitcoin futures does not mean that investors are actually holding Bitcoin. So take this with a grain of salt, or take this however way you want to take it. But when physically backed Bitcoin futures actually become more popular, come more into fruition, that'll change. Investors will actually have to hold Bitcoin. Let's keep going, right? We got 2 more news stories to go from PANTERA Capital. Bitcoin's 8-year compound annual growth rate is massive. What does this mean to you? This right here is something that I found really interesting. But let me paint the picture. Cryptocurrencies like Bitcoin represent a new asset class that has the lowest correlation to traditional assets, as well as one of the best annual performance records. Interesting. One of the best performing asset of the last decade, and has the lowest correlation to traditional assets. This is something that if you subscribe to this channel, then you know. But what's interesting is how they relate this to the 1980s. Because in the 1980s, the whole mindset was different. According to Moorhead, in the 1980s, there was little correlation between traditional assets that we view as correlated now. Meaning in the 1980s, there was little correlation between bonds, currencies, and commodities. And investors knew this. However, as investors became aware of the potential of diversification, they ended up managing similar portfolios. So over the years, these 3 assets became more correlated than they were 35 years ago. And the PANTERA CEO elaborated. Back in the 1980s, bond investors, they just owned bonds. Equities investors knew nothing about currencies. People who traded oil just traded oil, and so on. As modern portfolio theory took over, everybody wanted to have a diversified portfolio. Ironically, they all ended up buying the exact same portfolio. So now all these assets, now they're strongly correlated. Bitcoin is the new oil, is the new bonds, is the new non-correlated asset. Also the best performing asset of the last decade. I think we can all support that. But that's it. that is the video. Feel free to follow us on Twitter at Altcoin Daily for the most up-to-date updates. Link in the description. But that's the video for today. My name's Austin. Like always, I'll see you tomorrow.